Insight is one of our regular market analysts, Shawn Hackett. Hi,
Brooke.
Shawn.
How are you?
Yeah, doing well. Thanks for being here.
It's always a blast to be on Market to Market. So.
And be here in person,
Absolutely,
right? Doesn't
yes.
that feel good?
It's way better. Yes.
All right. Well, we'll start with wheat. So wheat's been chopping around a little bit this week. We heard that the weather was good in Ukraine, but there's concerns about the drought here in the United States. Where is that push going to come from for wheat to go up?
Well, as you know, we had a couple of winter kill events in Russia and here. And so the market had that initial surge of excitement. And of course, you never really know what winter kill is going to do until you come out of dormancy, which we're starting to do now. We think some of these crop condition readings that we're going to start to get from the USDA and show how bad the crop is actually coming out of dormancy could be the initial trigger. And we do expect a dry, summer or spring growing season for winter wheat that could be another additional catalyst. So we're really constructive KC winter wheat for those two reasons.
Okay, what's pushing the prices lower?
Uncertainty right now. We're just in a pause. The market's just uncertain. Most winter kill events are a lot of fanfare and they don't deliver as a wheat always seems to come out of it. But we think it's different this time. I know it's a statement you shouldn't be saying, but we do think it is. We think that the extreme cold against lack of snowfall this particular time did a lot more damage than the market's expecting.
Okay. All right. So we're talking about corn now. So we still have concerns in China about the swine fever. There's weather issues in South America. The Chinese look like they're buying again, but the market is headed down for the week. So what is going on?
The corn market is kind of stuck in a place where we're going to get this acreage report coming. We think we're going to have a very, very good planting season. You get out of the gate early and fast, more corn acres than not. And the market is just sort of saying we've sold so much to the Chinese and we have so much undelivered supplies, meaning we haven't shipped, so we have so much to ship. I think the market's a little worried that let's get those shipments out. Let's show that we're going to move some of this corn we've sold before we get excited about new demand from China.
The WASDE report is coming out on Tuesday. Is part of the price drop leading up to that? Well,
the last report, if you remember, everyone was expecting a drop-off in ending stocks, and we didn't get it. And it really disappointed the market. And the corn market's been kind of struggling ever since. So there's hope that maybe the USDA will drop corn ending stocks by increasing the demand. We're not really so sure that they're going to be willing to do that. We think they like to make more aggressive adjustments in the April report. We're kind of agnostic on the Tuesday report, delivering a bullish, a bullish signal. So we think the market's kind of sensing that maybe we shouldn't get too excited about that report.
Do you think the Chinese are stockpiling corn?
We don't think they are.
Okay.
If they were stockpiling corn, if they really were adding extra corn they didn't need, we wouldn't see the corn price domestically in China as high as it is. We really think they just got themselves into a bind. They had a terrible crop last year from those historic floods. And even though they'll never tell you that, the cash market in China tells you they got really in a lot of trouble. And all these ships waiting off of the Brazil coast to catch the soybeans are going to do the same thing for the corn once the second crop corn comes to the market. So we think the market's telling us they're not stockpiling.
Okay. Soybeans. So we saw the market kind of go all over the place. They were up on Tuesday and then they were down. Is there anything to feed the bulls? Is this rally done with soybeans?
When you're dealing with 120, 130 million bushel carryout, every little tiny adjustment either way makes the market go up 50 cents. So very, very hard from one day to the next to know which way the market's going to. Oh, the weather's a little bad. Now the weather's actually good. Demand was a little disappointing. So we just think we're stuck in a very volatile sideways trade into the springtime on soybeans. We don't expect this pattern to really change until we get further in and see what kind of acres we actually get planted here in the U.S.
Would a drought help or hurt beans?
Well, a drought, of course, would help, but the way our natural climate cycle algorithm is projecting, we're seeing a drought and a hot, dry pattern mostly into July with August backing off. That means corn could get in a lot of trouble with yield, but soybeans could get bailed out. Soybeans could rally on the worry, but we think the actual crop problem could be in the corn market. So we think the corn market could drag the soybean market up, not the other way around this time.
How do the exports look for the rest of the year?
Well, I think it's going to be based upon the kind of production we expect to see in the U.S. We already know South America is going to be probably not top end. We don't know how far below top end, but it's not going to be the bin buster crop we had last year. So everybody wants a big U.S. crop. If it looks like that crop's going to make it, then they'll back away and saying all is well. But if it looks like we're going to come up short, as we believe we are, then they're going to pedal to the metal again and really remember last year exports picked up in August when they realized our crop was going to come up short. That could be another month for a trigger for them to come back and buying aggressively again.
Okay. So we'll move on to cotton. You're our cotton expert, or at least one of them, right? So cotton is down. Is the battle for acres playing in, or part of the reason for this?
No doubt. I mean, it was just a few months ago that they were going to lose a lot of acres because they were way down, and then they had this incredible run on this endless demand from China because of the policy of not buying China labor cotton, which means the Chinese had to buy cotton from us to make the clothes to sell to us, because if not, we wouldn't take it. So it was this forced demand that just kept the market going up. And now it looks to us like cotton acres could be flat or even up a little bit. So that's a big, big change. And March, the cotton market tends to like making highs in March ahead of planting season. I think they've done enough to do what they need to do on acres, and then it comes down to what will Mother Nature do in the state of Texas really is what it really counts.
Yeah. What about the dollar right now? Is that going to impact demand for cotton?
I mean, a stronger dollar, which we've been seeing late, in the last few weeks, always on the margin creates some headwinds to exports. Of course, if you need it, you need it. No matter what, you pay what you have to pay. But on the margin, we've been dealing with a tailwind all last year that the dollar was going down, and that was creating this inflationary, wave. Well, that's kind of come off a little bit. We've seen copper got hit really hard, and there's a lot of selling from speculators on this stronger dollar policy, because right now these interest rates on the long bond have gone up, and it's worrying the market that could maybe create some capital flows into the U.S. that creates that strength in the dollar that we've been seeing. So that's something to monitor. The Brazilian real, by the way, got crushed this past week, and that's always inverse correlated to to the grain price, because Brazil is such a dominant exporter. So the weakness in the real is not a helpful sign for the grain markets to get their act together. That keeps them kind of in check, which they have been.
All right, well, we'll move on to meats. They were kind of mixed. Live cattle, there was some Chinese buying this week, but the market finished lower. So is it the dollar? Is that part of the problem?
Well, I mean, I don't think the Chinese is going to buy our pork because the dollar is strong or weak on the margin. I just think they bought so much pork from us. Their supplies have grown a lot. I know we've heard some ideas that ASF is coming back, but the bottom line is their supplies are up way larger than they were a year ago. Their exports are coming off from what they were a year ago, and the U.S. producer has geared up to sell them all this pork, and we really worry, that we could have a kind of a problem in the back half of the year, that too much supply is going to chase too little demand. If the Chinese really back away, as we think they could, we could be making a pretty important high here going into April.
What about U.S. or consumer demand?
Well, that obviously, if we get those vaccines going and people get confident and we go back out and we grill and we go to restaurants, I mean, that's going to be good for all meat demand. But at this price level for pork relative to beef, relative to chicken, it's kind of like the pork market's kind of pricing itself out a little bit. We worry that maybe it's done too much of a good thing, that it might give away some demand to these competing meat supplies.
Okay. What about the feeders? What's going on with that?
This constant concern over the corn price and the corn price going higher is always a detriment to the feeders market. We really worry about the feeder market later in the year, because if we're correct about a drought cycle and that the July being really, really hot, dry during pollination, and we get the corn market to have another wave higher, it's really going to set the feeder market back. So we still think they could have a little bit of a runway here, maybe into April or May before the corn market gets going again. But once that trigger gets going, we think that the feeder market could be in a lot of pressure. We'd be looking to be sellers this spring.
Okay. So with hogs, they ended down this week. What could drive the market higher?
Well, if the Chinese, after they're done with these holidays, they come in with guns a-blazing and buy a whole bunch again, maybe to refill some of the temporary stocks, that could certainly give the market some short-term confidence, and that certainly could be there. We're not anticipating that. We just think that the market, when you approach that 90, 95 cent area, on the June contract, I mean, it's going to be really hard to get over that hump without something dramatically changing with what we are currently looking at.
Okay, so we want to talk to you a little bit about dairy as well. So in one of your weekly reports, you said that dairy may blow the top off prices in 2022. So what do you think, though, in the short term?
The government supported U.S. price and gave a lot of return to the dairymen in the back half of last year, and that has gotten production growing in excess of 3%. That's bearish, especially into the seasonal strong production period into April, May, and June. However, the rest of the world didn't have that support, and they're growing production minimally. We're looking at GDT price, which is the international auction price for dairy, skyrocketing with whole milk powder prices jumping double digits this past week. There's a shortage. Fluid milk prices in China going parabolic into this week. So we have a big shortage outside the United States. So once we get through this bulge in production in the U.S., we're pretty excited that the back half of this year into 22 we will be able to feed that shortage because we're the only ones that have excess milk to supply. So it would be a really good period for dairy producers to make really good returns on the farm.
Yeah, they've had so many struggles that it would be nice to see them.
For sure. And it'd be nice for the real market to give them that money instead of the government doing it. Always prefer the real market to do it. And so I know they would appreciate that.
Yes, for sure. All right, I want to go back to grains and talking about the battle for acres between corn and beans and wheat. Where do you think this is all going to settle?
The big thing in the last few years has always been those fringe acres, which is loaded with corn, and we've been able to plant these big corn numbers every year. With the price where soybeans are versus where the price of corn is and how the shortage we have in the U.S., we think majority of those fringe acres are going to go to soybeans, even if we have a good start to the planting season. The core is going to be the core. They're going for corn. Corn prices are good. But to lose all those fringe acres, which are considerable, especially in the Dakotas, we think the corn acres actually could disappoint and not be as strong as we've been accustomed to seeing them. And we think this is the year soybeans need the acres. They want the acres. They're screaming for the acres, and the fringe acres are going to give it to them.
Okay. All right. Thank you for your time and your insight, Shawn. Great to have you on the show.
Thank you, Brooke. Thank you so much.
All right. Well, that will do it for this installment of Market to Market. We will be talking more in Market Plus, so join us there. You can find it on our website of markettomarket.org. For the next 2 weeks, we are involved in an important part of public television. It's called Pledge Time, and many of the stations that carry this program may shift when we're on, but the message is clear. If you value the work done on this program, please consider supporting the work we do with a financial contribution to your local PBS station. Next week, we will check out the long-term effects of damage done by snowstorms that hit the winter vegetable crop. Thanks for watching, and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.